Hello, everyone. Finally, we have Mr. Powell out. Just open his opening actually speech in Jackson Hole Symposium. So, according to the headline so far, we've seen that once again he targets the 2% inflation, which is the FOMC goal actually. And as I'm reading over here in a live feed that I have with Bloomberg, and I have also Bloomberg TV in front of me, I can see that Fed is keen to explicitly acknowledge challenges on persistently low rates. Also, before that comment in regards to persistently low rates, Mr. Powell, also places employment, as I'm reading right now, before inflation. So the priority for Fed is really the jobs data rather than to hit the inflation target. So as a priority is the employment. We can see a shift motivated by underlying changes to the economy. So that includes lower potential growth, persistently lower interest rates, and low inflation. That's the so far key comments from Mr. Trump. Also, they are really assess right now the shortfalls of employment. So we can understand that from now onwards, not that that wasn't the case so far, but especially from now onwards, the key data to be watched, and that the thing that it will actually impact the next actions within the 2020 for Fed will be solely NFP reports, initial claims, and everything that wages and everything that has to do with employment. So that was it so far. I will keep watching and monitoring further comments from Mr. Trump as he's live right now on Bloomberg TV from Jackson Hole. So we can see a bit jumps, like it chops ups and downs on dollar, as you can see. So that slide prior, just 2 hours prior the speech, we could see, actually, I'm not sharing my screen. I just realized that. Sorry for that. Let me share that with you. And I need to minimize myself or something. Oh, I think that looks better. Actually, just I will just zoom in the. Yeah, here is much better right now. So this is the euro dollar 1 hour chart. So you can see that dollar actually drifted lower against all the major currencies. So euro dollar spike higher 118.80. The next handle to be watched will be 119, of course. And that was pretty much expected because we were expected a very dovish tone from Mr. Powell. So as you might already know, any kind of a dovish approach from a central banker, it tends to be weak for the, it tends to weakness the currency. So the key, the key today was the level of dovishness that Fed is about to announce. So as we have seen, Fed is really it's all about bestowing more gifts on the market, like stocking a new phase in the risk rally, according to Morgan Stanley and a lot of portfolio managers. And also there is some kind of a new approach from Fed that would allow for prices to overshoot target. This is what we've seen so far. So a huge jump on euro dollar, and I assume that this is all over the place. So pound the same, dollar yen the same. So yen benefits against dollar. So a big drift, 105.60 for the time being. But I will take it step by step. As we can see, dollar remains the biggest loser of the week, right? So let me just quickly go through the dollar index. So this is the dollar basket, broke the just temporary medium-term support over here at 92.70, if I'm not mistaken. Yes, that was weak support, and broke that level. And if I put the daily chart on, you can see that it's extending. It's extending further to the downside. It's extending its losses. 92.44 was actually 4 weeks support, which has actually broken. So the very next support, immediate support, I will say, for dollar index is around, let me just change the color as well, will be around 92 handle. Round number, double bottom in August, and a support that hasn't been really seen since May 2018. So 92 was retested on August, and prior that it was just 2 years ago. So it seems that the Jackson Hole and Fed actually resume this kind of a sharp decline on dollar index that has been seen for the whole 2020 due to the pandemic, to the US recession and the global recession in general, and so on and so forth. So let me just double check the live feed from Fed to see if there is anything else from Mr. Powell. And also, let's not forget that this is a live streaming, so you can ask anything you want. Okay, we'll be here to reply to you. I can see that there are some comments. Let me just, okay. Hi, Frankie. Yes, go for it with your question. Let us know. Hello, everyone. Okay, here it's gold, please. Amirul is asking for gold. What we are expecting from the news releases. So I will start with Francis. Actually, what we are expecting from new releases. Actually, the big event of the week is already out. So the volatility is expected to continue, and I will put that side by side so you can see me as well. Let me just. Come on. Okay. Yeah. Okay. So as I was saying, the key event of the week was Mr. Powell. So he's already out. So pretty much there is nothing else that it could cause so much volatility as Mr. Powell's speech. So from now onwards, you should really, we're expecting until he finishes, we're expecting the volatility in the markets to remain. So we need to see, so there is a lot of volatility because he's speaking right now, he's not finishing. These kind of speeches tend to last for nearly 30 minutes time. So actually, there is nothing else for this week that is it is considered to be so important. We're gonna see further speeches from now onwards. We have ECB Lane later on after Mr. Powell. We have Bank of Canada Governor McLean. Tomorrow we have further speeches from Jackson Hole as well. So we're gonna see from other central bankers their views, their hints in regards to their potential steps and actions in regards to their banks, to the banks that they belong. But that was the key event. So pretty much from now onwards, and if you want me just to cover what else you should focus on, will be actually next week's events, and I'm referring to a bunch of economic data, inflation data from Europe. We have RBA monetary policy statement, so that will be key next week. We have inflation from Europe, and also next week would be NFP week. Right, so as always, that is considered to be one of the most volatile events of the month. So yeah, pretty much next will be a very, very, very busy and packed week in regards to the economic data. Right now, in regards to politics, geopolitics, and so on. So for this, you really focus on the headlines in regards to Hurricane Laura, because as I heard overnight, this hurricane is expected to be even worse in strength than 2005 and Katrina hurricane. So this has already has actually an impact on oil, and is expected to continue impact oils, and as a consequence, any kind of oil related currency and asset in general. So so let me move back to okay, there are a lot of questions. Just give me, let me just, I'm a bit confused over here. What we're expecting, and we have already replied that. Please, any positive talk on the euro dollar concerning Chair? Okay, I will. Okay, since let's take it step by step. I will zoom in a bit on euro dollar and return back to that. Let me zoom in. Okay, here is better. So, okay, first of all, I tend always to check the overall picture of the markets, and here we have the euro dollar daily chart. Okay. Let me just hide. Okay, this is the daily chart. So we have seen that euro dollar has entered some kind of a neutral zone since the end of July. So for pretty much a month now. So overall, we can see that it's stalled, it's flattening. So without seeing any significant break away from this range, so the upper barrier of this range is at 119.70, while the lower barrier of this range is 117. Any break at the end of the day, or at the end of the week, at the end of the month, and so on and so forth, below or above, in general, outside this range, cannot really give us a direction in regards to the medium term outlook for euro dollar. Now, if we emphasize to what is going on intraday, we can see that the momentum is very, very strong due to Ms. Powell and the so well expected, so much anticipated dovish tone that indeed he provided to us by saying that the Fed is stick to inflation averaging 2%, and all these headlines that I provided you. So pretty much he introduced, as expected, an average inflation targeting, and this is considered to be an extremely dovish tone. That's why we've seen euro gaining against dollar. So importantly, in the 1 hour chart, you can see that it broke the latest up fractal that we've seen. That was yesterday. That was today's peak. Sorry, at 118.50. But also this red line that I have over here, which is my 200 exponential moving average in this 1 hour chart. So this, along with the bullish crossover here on the moving averages, on the fast moving averages, 5 and 9, the extension of the Bollingers to the upside, and the spike on the momentum indicator. So you can see MACD move above its signal line, stochastic cross above 50, and they're looking further to the upside. RSI has also jumped above 50 and is having further space to cover to the upside. We can see that maybe the euro dollar might continue for the near term for further to the upside. Now, let's have a look. Actually, let me put my navigator with the indicators on. So I will. So I have. You can use actually by using Fibonacci retracement, we can get some immediate support and resistance areas. So we can see that it recovered already more than 50%, but that 61.8% Fibonacci, which coincides with this latest fractal at 118.85, remains a key resistance area to be watched, because if it managed to kick again that area and actually close the hourly candle above it. So if it closes above it, then the next level to be watched will be August 80th of August peak. So that brings us back to 119 area, actually to the highs of 119, so 119.30 up to 119.65. However, we need to see close the candle to close above the 61.8 Fibonacci and the 118.85 level. So let me just that was for euro dollar. Let's move on to cable. Actually, I will follow your questions. So I will go to Amirul, who asked for gold. So let me quickly, let's quickly go back to gold. So we've seen that, and hide, okay. Gold also jumped on dollar weakness. So that was something that has been seen also yesterday afternoon. So, despite the fact that durable goods came fell of expectations, so actually they came better than expected, and they helped slightly dollars. So that's why we've seen gold moving lower. But afterwards, we've seen a dollar getting weaker again and gold jumping to the upside. So this has to do, once again, on the anticipation of the Fed, and on because the markets were really pricing in this kind of dovish tone. So since then, it topped at 1953, and then it reversed slightly lower, and it was consolidating for the whole day until Mr. Powell speech. So right now, we've seen it getting back to the upside again, broke the latest high, moved back to 1978, just a breath below 1980 area. So if I zoom out a bit, we can see that it nearly reverted more than, let me just quickly, more than 50% of 2 weeks decline. So after it topped at $2,022, it drifted lower for the last 2 weeks' time. It was moving sideways, a bit stuck within the lows of 19 territory, but this week managed to recover and is currently to the upside and close to the 1960 barrier, which considered to be a key level to be watched. So let me put it in a yellow line. 1957 more precisely, but I prefer the round numbers are considered to be strong levels. So 1960, a key barrier, a level above the 50% retracement, a round number, but also a key resistance for the last 2 weeks, because you can see that the asset was retesting that area but never managed to break it until today. So it will be interesting to see whether the gold will actually close short of 1960, so to close below 1960, or whether it will manage to close above it. So a closure above it, it could actually resume a potential, it could actually signal a potential reversal of gold again to the upside, reverting all these losses. For the time being, we need to be a bit patient and to closely watch gold to see whether it will signal a reversal or whether it will get back to this ranking market and this consolidation mode between 1918, which is the 200 period moving average, and the 1950 territory. So let's wait and see. Intraday now, 1 hour chart. Jumped. We need to wait actually for another 25 minutes for that candle to close in order to understand what's going on. So because that needs another 25 minutes, I will zoom out to the 30 minutes chart to see what happened. So on the opening, and as Mr. Powell is speaking, we've seen the jump, it closed. This is a very, very bullish candle, nearly full body candle with a large tail to the upside, no tail to the downside. So that's a very strong 30 minutes candle. On the new candle is bearish, it turned quickly lower. So we need to be a bit patient. We can see that the fast moving average in the 30 minutes chart started to like flatten a bit. So we might see a consolidation in the near term. So let's wait and see. Overall picture of gold remains actually neutral. So you can see that after it topped at record highs at the beginning of August, it turned lower. However, it managed to sustain a support in the long term above 1900s. So the overall outlook, the long-term outlook remains positive to neutral. That was on gold. So let me continue. What's next? Just spoke about gold, my dear Amul. Thank you. Got shocked out today. Kayani, you should really be expecting that. We were expecting a very, very dovish Powell. So that means weak dollar. And take care when we have so volatile events. It's better to be a bit consider to emphasize on your risk management if you want to keep rates open. If you want to keep position open during your so volatile events. Dollar has been a bit strong for the last 2 hours and in effect euro a bit more than Aussie dollar. You mean a bit more weak, not a bit more strong, because it turned lower. So Aussie dollar, you're interested in Aussie dollar. Let's see what's going on in Aussie dollar. Aussie in general was one of the biggest beneficiaries this year. So we have seen a continuous long-term rally for Aussie dollar after the sell-off in the markets that we've seen in March. So continuous rally since the mid of March. And that actually is something that really is very, very similar to euro dollar. So we can see that they stalled a bit the last few weeks, but now we are in for a third day in a row to the upside. Actually broke the latest high at 0.7276. So that was another higher high for Aussie dollar, with higher lows as well. So can you see this kind of channel, guys? Upwards channel, so posting higher highs, posting higher lows. So that suggests that the overall outlook for Aussie remains positive. Intraday now, okay? Intraday now, we've seen it jumping higher, 72.90. It was the high, 89 actually, just a breath below it, but it quickly turned lower. So right now, the next level to be watched, it will be pretty much this 20-period moving average in the 1 hour chart. If we see the asset closing at the top of the hour below that area and it keeps moving lower, then we might see a retest of the 72 area, but not 72, which is also the near to 1200 period moving average, and also weeks resistance that now it looks to be converted into support. But for now, nothing has been confirmed yet. We need to see a break of that area and a shift down to the lower Bollingers. Okay, very volatile session. 30 minutes chart, jump, quickly turn and retrace 2 hours gains. Latest fractal at 0.7238. So let's wait and see. Okay, let me quickly have a Fibonacci extension over here. Expansion, sorry. So that should be So if you want to find some kind of immediate support and resistance levels, then you can use, other than Fibonacci, of course, you can use the Fibonacci expansion. So on this kind of turnovers. So we got as an immediate resistance area the 0.7260, the very next one is 7270, and the very, very next one is at this high or at the 161.8 Fibonacci extension, which stands at 0.7291. Now, if you want to find out immediate support areas, then you can use again the Fibonacci expansion, but on the latest turnover to the downside, which, come on, could give you some immediate support areas. So 9238 also coincides with my latest fractal, and the very next one will be 97223. Okay, so just an idea to give you an idea how you can use Fibonacci retracements. So just to summarize, Aussie dollar overall upwards channel, intraday sideways, long tail to the upside, but we need to wait for this candle to close in order to have further confirmation of the next of the direction for the next few hours. Let's cable. Was it the news? It showed up. Yes, it was. Yes, of course it was. So we can see that the rally has stalled a bit now because Mr. Powell is nearly done with his speech. So we can see a bit of a turn back to to levels that they were prior the speech. You can see that. So that was ahead of the speech, that was on the opening remarks, and now everything turned lower, retraced nearly all the gains that we have seen ahead. So post the speech and quickly turned down. So some kind of, I will say, that the markets have eased a bit. So yeah, they're turning back to post Powell territory. So currently, pound is like retesting 132 area. However, the support of the day is at It's at the lows of the day, which is really at 131.60 should be. Let me quickly, yeah, here we are. And interestingly, as you can see, today's low coincides with the, wait a minute, with 3 days resistance area. So 131.60 is also the resistance area that we have seen on Monday, Tuesday, and Wednesday. So it seems that the resistance might have turned into some kind of a support now. So if the asset close the candle, so in 20 minutes time, negatively, okay, and more precisely, it needs to at least close below the midpoint of the latest candle. So that's around, that should be below 132. So if it closes below 132, then it could retest the 131.60 territory, because we can see that momentum indicators also agree with this kind of approach, because RSI is falling, even though it's still above 50. So we need to see it crossing also 50. Okay, so it's falling, something that suggests that maybe bears are trying to gain the control of the asset. Okay, MACD is the momentum in the MACD lines are keep falling below signal lines, so that suggests that bears, okay, slowly are trying to take the control of the asset. So the negative momentum is increasing. On the other side, stochastic, even though it appreciated, it didn't manage to break above the 50 level. So it has been flattened instead. So that the momentum indicators are a bit mixed to negative. So let's wait and see whether that candle closed below 132. That could trigger the attention towards 131.60 and and the 200 period moving average, which stands at 131.50 area. So let me see next questions. As we already said, Francis, gold is like a dollar cross. So if dollar is weak, then we tend to see gold appreciated, so moving higher. So if dollar is weak, we see gold appreciated, moving higher. If dollar is strong, then we see gold being depreciated, so moving lower. Thank you, Ryan. Let me know if you have any questions or maybe addings that you want to share with us. So I don't use my personal Facebook page, I'm afraid. Francis, follow us on with the Hot Forex page, or actually we are in Instagram anyway, so you can follow us there and you can find our videos and explanations as well. How much of the dollar weakness sentiment on the market contributes to the overall increase in gold and dollar and euro dollar prices? Actually, it was dollar weak. Actually, the market sentiment this week had to do solely with the dollar and the Fed approach. So what we've seen so far this week is that mainly the wrong. So what I was sorry. Okay, so the sentiment this week, it was actually dominated, I will say, okay, by the risk appetite, and the risk appetite the risk appetite was to the upside due to ahead of the speech. And you should really know that dollar traditionally considered to be a safety asset. So as we have seen so far this year, there were a lot of periods during 2020 in which we have observed that we had a very an increasing uncertainty in the market. So we've seen a lot of the majority of market participants actually shifting to the safety of dollar. So this is something that this is one of the fundamental parts of dollar strength, of dollar in basket in general. But what is actually the reason why dollar is being the weakest currency of nearly one of the weakest currencies so far this year is because despite the safety demand that we have seen for dollar, we have still the election that they keep pressuring dollar. We have the US recession, which looks to be the worst recession globally. I mean, if we compare Europe recession, Asia recession, US recession, US is suffering the most from the pandemic. So all this adds further pressure to dollar. So we have seen that dollar is not treated so much as a safety asset anymore, but but we've seen this kind of shift to the traditional safe assets like gold, stocks, indices, metals in general, commodity-related currencies like Aussie, New Zealand, and Canadian dollar as well, and so on and so forth. So we have also a lot of questions from YouTube. So I'm not sure whether I replied to your question fully, like Marshall. Let me know if you need anything else. I will assist accordingly. We've seen pound dollar. Ashamah, let me know if you want me to repeat it, or I might repeat it again. Let me just check also YouTube's questions. Let me quickly check what's going on in YouTube, because we are live on YouTube at the same time. So unfortunately, I cannot see in my restream the YouTube questions. Let me just quickly. Okay. Here we are. Let me check the questions over here. Dollar Swiss. Okay, interesting. Dollar Swiss. Okay, let me bring back my. Okay, here we have dollar Swiss, and that was from. Okay, dollar Swiss. Let's see what's going on. We had, as you can see, the theme, other than risk appetite, it was a shift to the safe haven. So we've seen this week, actually, in general, this week a bit of a shift to the Swiss currency. So if I put the 1 hour chart, we can see that slowly we have some kind of a formation of a descending channel formation. Let me put a regression channel on, so it will help us to identify the direction of the oops, sorry, let me change the standard deviation, cancel. Okay, this should be at least 2, I think. Let's check. So yeah, that gives us a nice channel for dollar Swiss in the 1 hour chart. So we have seen that is slowly giving us lower lows since Friday afternoon, lower highs as well. So it currently managed to retest the upper level of this channel, but quickly turned below it. So we have some kind of not an evening star, actually not an evening star, but a bearish pattern, because we've seen the previous an hour ago, a bearish candle which actually erased the previous 2 hours, the previous 2 candles. So you can see that it closed at over here. That should be 0.9083 level. So it closed here, erasing the gains of the previous 2 hours. Right now, it opened at the same level with a long tail to the downside, but quickly turned higher and is trying to resume the gains again. So it was a very long tail, but as I said, we cannot really focus on this session, this 1 hour session, because it was during the speech. So that's why we had a lot of volatility. So be a bit patient and wait for that candle to close. And for further confirmation, wait also for the very next candle as well. Or if you prefer, you can shift to the 30 minutes chart. Okay, because we need to make sure that, in general, guys, you should know that we need to leave the markets to calm down a bit, okay, in order to the volatility to ease, and in order to have a clear direction of where the market is hitting into. Okay, this is the first 30 minutes chart. Okay, jumped, drifted to the lower area of the channel, sorry, the 0.9033 area, quickly turned higher again, retesting the upper line. So you can see that this kind of channel can give you intraday, in the very short time frame, nice support and resistance area. So I will put, I'm not sure whether you can see that, I would put it in a red line. I think it will be more visible, and a thick line as well. Okay, I think you can see that right now. This is the dollar Swiss 30 minutes chart, but this channel gives you resistance area, support area, and a second support area. If the asset turns pullbacks from these highs, then you are getting another level to be watched. That could, in case that it turns again down, then you have this treated as a support and this will be the very next support, and so on and so forth. So you should know that pretty much similar to Bollinger's, a break of the middle line suggests the retest of the upper line. A pullback away from the upper line suggests the retest of the middle line. A break of the middle line suggests the retest of the lower line, and so on and so forth. Because we are in a channel, so the price tends to move within this channel as like waves. Okay. Hopefully, I replied to your question, dear. What's going on? Fed fires all on cylinder. Close. So, okay, we've seen dollar Swiss. Please analyze euro dollar. Okay, I will go back to euro dollar even though we analyzed it already. So 30 minutes charts, jumped, retest 119 territory, turn quickly lower, and it's moving lower. So dollar is gaining some of its losses back the last 30 minutes, it seems, now that Mr. Powell has finished. So a lot of kicks ups and downs I can see over here. So we need to wait for the markets to calm down a bit. But if this candle continues moving lower, the very next support to be seen will be 117.70 territory, while the very next one could be found on Friday's low and then 117.54 over here. In case if we see the asset in closing the session in 3 minutes time negatively, so closing like below the 118 barrier. Don't forget 118 round number and a key area, a key support area, round number and a key support area. A break of 118 could open the doors further to the downside, possibly 20 or even 30 minutes below 118. So let me just have a look on the 100 moving average over here. So it crossed below the 20 and 100 moving average. The fast moving average I keep moving lower. So that looks to be, the momentum looks to turn negatively because fast MAs are turning lower. It broke the 100 moving average. RSI turns aggressively lower again. MACD the same, stochastic the same, so we might see a turnover after all. As I taught you, next level to be watched 117.70, 117.50. Next question, pound yen. Okay, a very volatile asset, one of the most volatile assets in the history of forex markets. So it seems that due to the dollar weakness, we have a strong yen for the time being. If I click on dollar yen, you can see that it had a very huge actually candle lower. Now it's trying to get back in track, but nothing is certain yet. So pound yen, I will get back to pound yen. So pound yen, again to the upside, but it didn't manage to break today's actually high, 114.30. It retested it. Can you see that? I will zoom in a bit. So this is 114, actually 114.29. It was this week's resistance. Okay, actually more than this is considered to be 3 months resistance. 114.29 is 3 months resistance. So it retested it on the past hour, but quickly turned below it. And we have this kind of a dovish candle, a doji candle with long tails below that and long tails to the upside. So that clearly stays in decision. So if we see this kind of doji candles close to resistance or support areas, then that tends to suggest a reversal signal. So we had a jump It retested that key resistance area, but it closed below it and it closed with a decision. So a candle that, if this candle closed negatively and more precisely below 114.16, which is my 50% retracement area the past 2 hours, then we're gonna have a bearish formation. Then this could trigger the attention further to the downside and to the 140 or even to 139, 39.90 area. So keep an eye on that. For the time being, this doji candle looks to signal some kind of reversal, but we need confirmation. Let me zoom into the 30 minutes chart. So up, 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 doji, in doji, so a huge indecision. So we need to wait and see how this will end. We need a confirmed closing below 114, okay, in order to suggest a pullback lower, okay, down to 139 area or at least 140. Overall, however, if I zoom out and go to the daily chart, I know it's a bit messy, but the daily chart remains very, very positive. Let me clear a bit all this mess. If I clear a bit this mess, you can see that we had a rally since the mid of June, upside, 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 some correction, but it continues being supported by the 20-day moving average. So for those that are interested in daily chart, the 20-day moving average, which stands right now at around 139, looks to be a good support area and looks to support in general the asset very, very well. Okay, that was on pound yen. Swiss yen. Oh, what's wrong with yen? And Swiss yen. Another very volatile asset. Let me find it for you. Swiss yen. It should be somewhere. Swiss yen. Here it is. Similar picture with pound yen, a lot to the upside since the mid of May, and then resume again in the mid of June. You can clearly see there's moving to the upside. This asset is not well supported by 20-day moving average, but it is well supported by the 50 simple moving average, if I'm not mistaken. Yes, or the 50 exponential moving average, if you prefer. So you can see provide support to the asset since June. However, we had a pullback in the middle of August, turned lower. However, it found some kind of a floor at 115.67, tried to rebound. It managed to actually gain more than 50% of the losses of August losses, and is currently in a very, very interesting level. The midpoint of this decline, the 116.65. So you can understand that by the end of the week, so tomorrow is Friday, is the end of the week, and nearly we are getting into the end of the month, okay? A close below this area, even today or tomorrow, could trigger the attention again back to the downside and a potential pullback and a retest of 115.67 floor, okay? Intraday now, rebounded, moved higher. We had a high over here at 16.99, just a breath below 117 handle, but it quickly turned low. It turns lower. It turned lower in this new session. Okay, it's a bit that the intraday is very, very choppy. It's sideways. I cannot really say something, Miami, for the Swiss yen. At least in the 1 hour chart is still ranking. So despite the rebound, we can see that it didn't manage to break this the last actually 2 days consolidation. So if I put some kind of a shape over here for today and yesterday, you can see that it's still moving sideways. We don't have a clear direction, okay? So be a bit patient, or if you want, you can check the 30 minutes chart in which we had a rebound, but a doji candle follow, a pullback below the highs, which looks to continue. So temporarily for the near term, at least for the 30 minutes chart, we have a strong pullback. So keep an eye on that. If this decline confirms, then we should turn the attention to the latest fractals as our potential support areas. So for example, 116.50 or 116.36. Next question, guys. Oh, a lot of questions about gold, even though we have seen gold. Okay, I will finish with gold and CAD then. So let's see gold again. As we said, this is a daily chart, remains in some kind of a descending triangle. Okay, after that record highs at 2083 in the beginning of August, but it's in a descending triangle overall, pulled away from today's highs, failed to break the 20-day moving average, and turned lower. Okay, so very sideways in the daily picture. Intraday now. Whoa, that's very interesting. Doji candle rejected the highs from Powell's speech, turned lower, and closed very, very close to the open price. So this suggests that the bears managed to push the price lower despite the bulls managed to move the asset back to 1978 territory. So it seems that the momentum for gold in the 1-hour chart is turning negative. So dollar is gaining some kind of a support again. I don't know whether at the data, because we have actually, guys, recent. We have actually, can you see my screen? Yes, you can. So we had the GDP numbers out earlier, which actually we've seen a boost. They have shown a growth boost for the second quarter for GDP. Okay, so they came larger than expected with upwards revisions, so positive. And earlier we had the pending home sales that also surprised and came better than expected. So I'm not sure whether this dollar strength that we are seeing right now in this candle is due to the data or some kind of a profit-taking action from the players. So the players that actually were bullish, they might have closed their position. So that's why we have this sell-off right now, just as a profit-taking action. We cannot really tell. We need to wait for the volatility to calm down a bit in the markets. So you should know that gold remains in a descending triangle, a bit steady, as soon as we don't see a break of this triangle to the downside and a break of 19,000 level. Okay, intraday, that's a big candle, but I need to wait for that to close. For those that they are scalpers or intraday traders, then you can go to the 30-minute chart. You can see that we had a jump back. We have two consecutive negative candles. So the very next support could be found at at the 1907 or even 1900s territory for gold. Hope that helps. Okay. Last but not least, dollar CAD. Extended gains, the Canadian dollar extended gains so far today. It managed to move down to 131 area, but quickly turn higher on the dollar turn. But let's not forget that the hurricane is still there. So the Canadian dollar should remain, is expected at least to remain stronger than dollar because of the hurricanes. So let's not forget that the hurricanes are causing concerns in regards to the refineries in the Gulf of Mexico. And let's not forget that if we're saying that the crude product, if we see the Hurricane Laura causing, actually we are seeing the Hurricane Laura causing the majority of the crude production in the Gulf to be shut in and the refineries in the area to be closed, then that tends to help the oil to move higher. And if the oil moves higher, then dollar CAD will move lower because Canadian dollar is getting stronger as oil gets stronger, okay? So keep an eye on that. This is something that you should consider for the overnight trading and ahead of the weekend and so on and so forth. Now for intraday picture, we have a kind of a rebound. The very next resistance area to be seen is the confluence of the Bollinger's MI fractal at 131.66. This is the next resistance area to be seen. If that breaks, the very next one is again the 132 level. If it backs down again, then 131 is a round number and a support that hasn't really retested, since the January 2020, so for nearly the whole year. So a break of 131 could open the doors towards 130.50 or even 130 territory. So that's something that you should have in mind in the long term, okay? Hopefully that helps. Hopefully I managed to help everyone with their questions. We are nearly, if I'm not mistaken, nearly an hour live, running a bit out of steam. So this is a final call for questions, guys. We'll keep an eye on the headlines. Maybe I missed something, but I think that was it. We've seen the remarks from Mr. Powell. What we are emphasizing, actually, the key parts of this statement were about the 2% averaged inflation goal and the fact that they have as their priority the employment ahead of the inflation. So they have shifted their views to place employment ahead of inflation. What else? Also, one of the main takeaways is that he said that following periods when inflation has been running consistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for same time. So a very, very, very dovish comment. Okay, so dollar remains mixed, ups and downs. We need to wait for that to calm down a bit. In the meantime, let me summarize a bit. Gold jumped higher and then it drifted lower to 1920 area. Dollar index right now 93.33. The next level to be watched is actually the it should be actually the 93.450 or even 93.80 territory. Let's move a bit on the bonds and stocks and indices. Let's see what's going on with Nasdaq, Dow Jones, 10-year bond. So bonds, we can see that bonds actually are kicking off due to a quick reversal in the dollar. So turn lower, 139.15, turn lower. So if bonds are turning lower, then indices should actually, let me just the equity should be appreciated. Let's see, I cannot really find the S&P 500, so I will zoom in on what's going on in NASDAQ. NASDAQ remains very, very choppy for some reason. Let me quickly find S&P 500. No, I cannot open S&P 500 for some reason. I mean, let me just, where is it? Here we are. Okay, here we are. So it looks to post another high, 34.93, and quickly turns lower on the quick reversal of dollar. So, however, the US stocks, for once again, they have opened higher despite the Jackson Hole. So they have managed to post higher. So in general, you should know that all the majors are in a big rally, and the momentum hasn't really turned yet. So the overall outlook for major indices like S&P, NASDAQ, Dow Jones, and so on and so forth remain strong. And that's it, guys. Pound, okay. Hossein, okay, we'll finish with pounds since maybe you've missed it. It's pretty much, we've seen a retest of 132, 132.80, but a quick pullback, retesting the low of the day at 31.60. So it has actually reversed the gains that we have seen in the European session. So it turned negative. So if that support breaks, the very next one, it is, other than the 200 period moving average, it could be more precisely the 131.15 or 131 level. But in order this to be confirmed, we need to see a close of this candle at 131.60. So we need to see a good decisive bearish candle like to extend losses. So we had a bearish crossover here from the fast moving average, so that adds to the negativity of the intraday picture. Bollingers also extend to the downside, adds to the negativity of the near-term outlook. MACD is declining, suggesting that the positive momentum is decreasing. Stochastic turned lower, RSI turned below 50. So overall, the near-term picture, the 1 hour picture for pound is negative. So we might see extending losses in the next few hours if it managed to close below or to close below the latest low, which was 131.80. So if it closed below that, then it could retest the 200 period moving average, and if it breaks that level as well, then it could retest yesterday's support at the 131.13 area. So guys, I'm sorry, I'm running out of steam. Hopefully our session managed to give you an idea of what's going on. It's a very volatile session, so there is a lot of volatility in the markets right now. We need to wait a bit for the markets to calm down a bit. So yes, so that was a very volatile session. I think it will get back to, it's getting calmer and calmer already, but yeah, we might see further volatility on the ECB's Lane remarks, speeches, and on Bank of Canada Governor McLean also, which is later on. But that was the key event of the day. Mr. Powell was the key event of the day, and that's over. So we should see calmer reactions from now onwards. So I will end the session. Thank you very much for attending our live streaming. Hopefully, I managed to help you understand what's going on, what's going on in the markets, and why Fed managed to why Fed actually affects so much the dollar, because it's all about monetary policy. A dovish monetary policy suggests lower rates for longer or even negative rates. The inflation also affects, and that suggests that the country's currency tends to depreciate, to get cheaper. So this is in the very, very simple definition of what we mean dovish monetary policy. It's a uber aggressive monetary policy from Fed. So we'll keep an eye on Fed, okay, and all the central bankers for the rest of the 2020, because we are in a global recession. So the key, other than the US elections, other than the pandemic, the very next key issue in 2020 will be how slow will be the global economic recovery in the world, okay? So thank you very much for attending. Hope you're having a great day ahead. And I'll see you again next week. Don't forget for the YouTube users to subscribe to our channel. With this way, you will get alerts whenever we have a YouTube live. Okay, so by clicking subscribe, you can see our latest videos and you can participate on our YouTube lives from the very, very beginning. Thank you very much for attending. Hope you are having a great day ahead, and see you again next week. Take care. Bye-bye. Stay safe.